What's going on, y'all? And happy Friday. Welcome to another edition of Friday's Wrap Up, where I bring you just what happened this past week very quickly. So whether you're showing houses, whether you're holding open houses, whether you're talking to sellers or you bump into somebody at the grocery store or a kid's event on the soccer field, you have some talking points of what's going on in the marketplace. And the biggest question I got this past week is, why did interest rates increase after the Fed did a 0.5 point cut? And the short story is, traders' fear of inflation, meaning that, look, by the Fed's aggressive reduction, instead of a quarter, it went to a half. The fear from a trader standpoint became, well, wait, okay, is this going to spook some fears that now consumers have a little bit more spending power? Now they're going to go out and chase some goods. We're going to get more cash flow flowing around the system, and it's going to have an inflationary effect on the marketplace, which is going to prevent further decreases, right? The other thing is the market's always forward thinking. So the Fed meeting didn't really tell them anything that they didn't already anticipate or already know. So the fear of inflation due to that aggressive cut was why interest rates kind of took a sideways turn and ever so slightly crept up almost every day this week, except for today. The other thing that we saw was consumer confidence had the biggest drop since April of this year. Okay, so April of this year, we saw a significant drop from March. We saw that once again. I think a lot of that is relatable to the presidential election. I think you're starting to see angst. You're starting to see what is going to happen. Does it matter if Kamala gets elected? Does it matter if Trump gets elected? And no one really having the clear picture of what side or where it's going to go. So what I'm seeing is a little bit of angst on the consumer's part. So consumer confidence really fell off. We also saw building permits pull back a little bit, right? Which was quite interesting because the previous building permits was a positive. So to see that pull back again, it's something that I definitely want to keep my eye on, but the numbers were not alarming. The other thing that we saw was new home sales continues to crush it. That is where the consumer is going. Tends to be the first time home buyer or the first move up, right? Where you're going to get into the nice new shiny house. You got new everything. And if location is not your biggest concern, because obviously new homes is primarily on the outskirts, well, then that's going to be a great choice for you. Massive incentives, still giving big giveaways, giving seller concessions, buying down rates, whatever you really want, the builder is willing to accommodate. So not surprised to see the new build really flourish. And I don't anticipate that date is going to change from an existing home to a new home until we get into the mid 5s to high 5% range on interest rates for a 30-year fix. And I don't see that coming until probably Q3 of 2025. I do not think we get there until then. It's going to not be until late next summer, early fall. The other thing that we saw was the labor market continues to stabilize. Initial jobless claims come in a little bit lighter than anticipated. So again, it's a good pause for the Fed. I don't think they got to be overly concerned about it. We see some stabilization in that sector, and that's a good thing for the overall health of the economy. And then the last thing we saw today was PCE. PCE numbers came in, inflationary numbers. They were right in line with what everyone expected. They're getting closer to the 2% range that the Fed had. The only thing that I'm a little bit concerned about is, obviously, this number that was just released today does not take into effect the recent Fed funds cut that a lot of people are anticipating could potentially be an inflationary problem. So I don't see that flowing through the system probably till maybe December, maybe Q1 of next year. It'll be interesting to see kind of how that plays out. But the good thing from a trader's perspective, it pushed rates down. It eased their fears of inflation a little bit because inflation was obviously already ticking down. If that number came in right in line, I think interest rates would have remained a little bit higher. But what it did is it kind of created what's called a ceiling in the 10-year Treasury at 3.8%. I think we finished at like 3.75, 76. So that was a good thing as we head into the weekend, allow the traders to digest, and we can get back at it next week. With the big thing coming next week, back to the labor market, we have non-farm payrolls on Friday, and that will be the biggest data that comes out next week. All right, y'all, have a wonderful weekend. Happy selling out there. If I can do anything for you, a flyer, you need a quote, whatever the case may be, you just have a question, do not hesitate to call, email, text, whatever you need to do. All right, y'all, happy selling this weekend. Have a great weekend. Cheers.